If you've ever started a business, you know the feeling, right? Money comes in, money goes out, and trying to keep it all straight can feel, well, pretty chaotic. Today, we're going to cut through all that confusion with one simple but really powerful tool.
Ah, yes. The question that keeps pretty much every new business owner up at night. You make a sale, you pay a bill, you buy some supplies, but at the end of the month, did you actually make a profit? It's so easy to feel like you're just flying blind.
So, to get out of that financial fog, you don't need a crystal ball. What you need is a map, a really clear, reliable guide that shows you exactly where every single dollar comes from and where it's going. Without that, you're just guessing.
All right, let's dive right in. This financial map we're talking about has an official name. It's called the Chart of Accounts. Now, I know that sounds super formal, maybe even a little intimidating, but trust me, it's one of the best organizational tools you'll ever have. Think of it like this. Your business is a huge office, and every time money moves, it creates a little document. The Chart of Accounts, or COA for short, is the perfectly labeled filing cabinet for all those documents. No more messy piles of receipts on your desk. Every single piece of financial info has a specific home.
So how do you build this, massive filing cabinet? Well, here's the secret, and it's a game changer. It might seem like there are a million different ways to track money, but in the entire world of accounting, every single transaction, it fits into one of just 5 buckets. That's it, just 5. If you can master these 5 categories, you've pretty much mastered the language of business. Let's start with the first set of buckets. These are all about your business's financial position at a single moment in time. Think of it like a snapshot. A quick picture of what you have versus what you're on the hook for.
First up, assets. This is all the good stuff. Put simply, if it's something your business owns that can put money in your pocket now or will in the future, it's an asset. These are the resources you have at your command.
And this is where it gets real. We're not talking about abstract ideas here. Your assets are things like the actual cash you have in the bank, let's say $10,000. It's the products on your shelf just waiting to be sold, your inventory. It's even the money that customers still owe you. Accountants call that accounts receivable. And yep, that computer you're working on right now, that's an asset too.
Now, on the other side of that coin, we have liabilities. This one's pretty straightforward. It's what you owe. These are all your debts and your financial obligations to other people or other businesses.
And liabilities can pop up in a lot of different forms. It could be a big bank loan you took out to get started. It's also the bills you owe to your suppliers. That's called accounts payable. And of course, any balance you're carrying on the company credit card. That's a liability.
So you see the relationship here, right? Assets are the resources you control that are going to bring you value. Liabilities are the claims that other people have on those resources. You've got to know both sides of the story to understand where you really stand.
Which brings us perfectly to our third bucket, equity. Now, imagine for a second that you sold off all your assets and used that cash to pay off every single one of your liabilities. Whatever is left over, that's your equity. It's the true value of the owner's stake in the company. It's what's really yours.
And this brings us to what's famously called the fundamental accounting equation. You just take the total value of what you own, your assets, and subtract the total value of what you owe, your liabilities. And what you're left with is equity. It's really that simple and that powerful.
Okay, let's move on to our next couple of buckets. If those first 3 were like a snapshot in time, these next 2 are more like a movie. They track the flow of money in and out of your business over a period of time, like a month or a whole year.
Our fourth bucket is income, which you'll also hear called revenue. This is all the money flowing into your business because you're doing what your business is supposed to do, selling your products or providing your services.
So for example, you might have brought in, say, $15,000 from selling your products. If you're a consultant, maybe you earned another $5,000 in service fees. Hey, even that little bit of interest your bank account earns counts as income. It's all money coming in the door. And finally, our fifth and final bucket, expenses. You know that old saying, you have to spend money to make money? Well, that's exactly what expenses are. They are the cost you have to pay to keep the lights on and to generate all that income we just talked about.
This bucket is filled with all those necessary outflows. We're talking about things like rent for your office, the salaries you pay your team, the money you spend on advertising to get new customers, and even the small stuff, like office supplies.
Okay, so we have our 5 buckets: assets, liabilities, equity, income, and expenses. Why does organizing everything this way matter so much? Because these 5 buckets, they're the literal building blocks for understanding the health and performance of your entire business. And here's the big payoff.
Your first three buckets, assets, liabilities, and equity, they're used to build your balance sheet. That's that financial snapshot we talked about. Your other two buckets, income and expenses, they create your profit and loss statement, or P&L. That's the document that tells you if you are actually profitable. These two reports are probably the most important documents in your business, and they are built directly from our 5 buckets.
So now that you have these buckets, how do you keep it all organized, especially as your business starts to grow? Well, here's a little pro tip. To keep everything tidy, accountants use a really simple but super effective numbering system.
The logic behind this is so simple and actually pretty clever. All your asset accounts might start with a 1, like account number 1010 for cash and bank. All your liability accounts start with a 2, equity with a 3, and so on. This system just makes it incredibly fast to find things and guarantees your financial reports are always perfectly organized.
You know, at the end of the day, this system isn't just about rules and numbers. It's about clarity. By consistently organizing every single transaction into one of these 5 buckets, you make sure that every single dollar has a proper home. You'll never have to wonder, where did all the money go, ever again.
So you see, the chart of accounts isn't just some boring list. It truly is your financial map. It shows you exactly where you are, it shows you where you've been, and it gives you the data you need to decide where to go next. So the only question left is, where will you steer your business?